What's going on YouTube? In this video, we're going to go over Etsy, ticker symbol ETSY. Company reported their Q3 earnings beat on top and bottom lines, and with their forward Q4 guidance, majority of analysts have revised their next quarter expectations lower. So year to date, Etsy is down 27%, and over the course of 1 year, down 41%. Company's got 12.3% short interest on it, and a forward-looking PE of 17. So with their Q4 guidance, they're expecting to see potentially a decline in low single digits year over year. However, if trends do worsen, they could see mid-single digit decline, but if trends become better, they could see even a slight increase in their overall gross market sales. So their take rate is also currently 20.9 last quarter, but they're potentially expecting 20.8% this next quarter. So one big thing I found that was very good for this company is they finally sold off Elo 7, which was not a very positive acquisition that this company made in the past. The Elo 7 was just not performing like they thought it would, and with that, they finally decided to cut their losses and eliminate that business overall. They did sell it for a little bit of a loss, but it is now gone, and that should hopefully improve the overall financials at the company. It wasn't a big hit to the overall financials, but it wasn't helping. Also, the company does have a share buyback program right now, and they purchased about $297 million worth of shares, or 3.9 million shares, for an average cost basis of like $75.86 per share. So this company also owns two other companies called Depop and Reverb. And basically, these are just very small niche businesses that I mean, when we get to the financials, they generate some revenue to the business, but it's not a big number. But it is actually shockingly not, it moves the needle, but not like I think they could definitely grow this one specifically and add in children's wear as well versus just men's and women's wear. But this specific website apparently attracts a lot of Gen Zers, and I think they're just maintaining men's and women's wear. They're not going to add in children's wear, but I think if they did, it could generate more traffic to this overall website and maybe increase revenues in the future. So I think that should be something they should do, in my opinion. And Reverb over here just does musical instruments. Again, something that I think is a very relatively smaller niche website that only attracts certain customers. Over to the financials on Etsy, we've got our revenue, gross profit, and net income. We can see all three trending higher, but we see a big hit in 2022, and we come over to their 10Q, and we see on their 10Q, on their income statement, they took a $1 billion impairment charge, and basically what that was their excess goodwill they had from purchasing Depop and Elo 7. It was just a non-cash expense. They just wrote off all of their goodwill from the purchases of those two businesses, and we saw a $1 billion hit to our net income last year. So if you were to add back in that non-cash charge of the $1 billion impairment, you would see your trend somewhere in this range. It would definitely be probably slightly down somewhere in this range here, right where my cursor is. So you'd see something like that probably for a chart. Gross margin sitting at 70.3% last quarter, trailing 12 months. We are 70.6, so we're starting to see a little bit of contraction in our overall gross margins right now. And net margins, though, doing the opposite. Last quarter, 13.8%, trailing 12 months, 12.3%. So good to see net margins are growing right now. Revenue, gross profit, not much at all for growth, and they're not forecasting any growth, at least for the next quarter. Return on invested capital sitting at 17%, earnings yield 3%, PE ratio today 33. And we can see that is relatively in the middle of where historically it has kind of been. Cash to debt, company's got more cash than short-term debt, but has a lot more debt than cash, overall debt, than cash. But once we get over the 10Q and look at their balance sheet, their debt is incredibly cheap. So we have net income to free cash flow. We do produce more free cash flow than net income, and we can see over here our free cash flows are just kind of stagnant right around $600 to $700 million. Capital expenditures pretty nominal at $12 million, and we have a share count dilution. We were last year at 127 shares. Now we're up to 139 million shares, even with a share buyback program going on. So to the balance sheet, we got $977 million in cash, and we subtract out our total current liabilities of $549 million. That leaves us with a net positive between the two, but we do have $2.3 billion in long-term debt. But with that long-term debt, and we can come down here, we can see these notes were issued in 2019, 2020, and 2021 for a total of $2.3 billion. But the interest on all three of those notes is 0.3, 0.3, and 0.4%. So basically doesn't cost this company anything to have $2.3 billion in debt. So I think that is fantastic, and I wouldn't pay it off either. I would just wait. But the first note comes due October 1st, 2026, and that first note is in the amount of $646 million. So then onto the income statement, we can see revenue year over year is up, and our gross profit year over year also up. Our net income obviously going to be up because of that big impairment charge. And we get to add in $8.4 million for other income from Reverb and Depop. So we get to add those back in, and there's probably a little bit of negative income from that section, the other income from that ELO 7 business. I don't know how much of that income, well, it probably would be negative income that came from ELO 7. So we might see this start to increase a little bit more in the future just because there won't be a decrease from ELO 7 adding into that other income as well. But net income then is $87.8 million. And down to the cash flows in the last 9 months, company did $224 million in net income. Add back in stock-based compensation of $216 million, which is basically the same amount of net income, which is not ideal, obviously, but they are buying back a lot of shares as well. So it's kind of offsetting that. Depreciation, amortization, adding back that in as well. So overall, cash from operations, we're looking at about $410 million in the last 9 months, minus off only $8 million of CapEx, which leaves us with $402 million in free cash flow in the last 9 months. So positive free cash flow. That free cash flow in 1 year's time would likely pay for one of those notes if they needed to do that. So the repurchase of the stock that they are doing, they bought back $484 million of shares in the last 9 months as well. Over to the comps, we got PDD, Baba, eBay, and Pins. And we come down here to our comparable charts. We got our market cap, PDD, Baba obviously have significant market caps over the other 3 competitors. So we come over here to our growth rate. We can see Etsy, pretty decent growth rate for the next 5 years, but PDD, in my opinion, has the best growth rate overall. And that company is one that we have valued before in the past. I'll drop a link to that video right now, but that is a company I think everybody should at least take a few minutes and analyze and see if that is worth fitting into your portfolio or not. As you can see in the comparables on gross margin, we're in line with competition. Operating margin and profit margin, we start to dip below where the competition is currently sitting, and obviously could be doing a lot better overall on operating and profit margins. And free cash flow, obviously Baba and PDD do more revenue, but we can compare Etsy to eBay and Pins, and we can see eBay actually does pretty decent on overall free cash flow. Return on invested capital, 17%, and in comparison, not too bad. And earnings yield, not the best in comparison, but still pretty decent. And a PE, you're going to pay the same premium for Etsy as you would PDD for this company, which I don't know that I would want to pay. If I had to choose between PDD and Etsy, I know which one I'd pick. What we're going to do on this valuation spreadsheet is right now we're going to value the company as it sits today. And then what we'll do is we'll plug in our forward-looking numbers and figure out what this thing is valued forward-looking as well. So today, Punish Valuation values this company at $43.98, and Pins is a negative company. So based on our comparables, we're looking at $42.83 manual PE, basically 17 years to earn our current market cap. Price to book, currently negative. PEG ratio today sitting at 3.3, forward looking 3.2, and that's telling us we are very overvalued there. Graham's valuation, giving them $91 per share. Our discounted cash flow valuation, historically we've done 82% roughly for growth rate. Analysts are forecasting 7%. I bumped them up to about 10% growth rate. Obviously, we can see in the last 4 years, company really hasn't grown their free cash flow at all. It's just kind of stagnant in the mid 600s for free cash flow. So can't expect too much for growth rate because it hasn't really proven that as of lately. But that gives them a DCF price per share of $81. Rule 72, we have 2 EPS sources for growth rate, 13.8% for an average growth rate. And then what we get to do is double our EPS 2 times for a future EPS of 10, which gives us a fair value of $68.98. So based on today's numbers, Etsy is worth $65.57, currently trading at $82, and a 30% margin safety of our fair market value is $45.90. That'd be about an acceptable buy price for this company based on today's numbers. Analysts have a price target of $97.85. But let's plug in our forward-looking numbers. We have, I believe, 4.7 and 17.35. So then that gives us a P/E fair value forward-looking of $82.67. Our comps then become $80.53. Come over here to Graham's valuation. It gives them $171.08. Our DCF will not change, but our rule of 72 will change. And what we're going to want to do is have our double at 2, which will be 18.8 for future EPS, which gives a fair value of $129.67. So then our fair market value then is $109 even, and 30% margin safety, $76.30. Analyst price target, obviously unchanged. So now we're forward looking, sitting at about $109 valuation on this business. Now over to the stock chart. Investors have pushed this stock right into resistance on a big green candle, and probably going to push through that. It's probably going to push through resistance, and I would assume it would likely stall out around $100-ish per share, about in line with where analyst expectations are on this business, about $97 to $100 per share, give or take a few dollars. Obviously, it's not a perfect science on the overall stock market, because the stock market almost never makes sense. But that's what I would see. I would see this company push through, get up to about this range. There's a bunch of junk to the left here around that $100 range. Likely push into that, pulls back into support around $84, $86 per share, and then potentially resumes back up higher. Pattern like that obviously could push up to here, chop around for a while, and then pushes back up through and sees some significant growth within the company in the future. And then this thing just continues to trade and breaks its final downtrend. Still making lower highs on the company. In the bigger picture here, we can still see that when we scroll out, we can still see we're we double bottom basically, kind of made lower lows, but depending on how you draw it, how you look at it, you could definitely say that they potentially did double bottom, or they made some new lows, which they kind of did, depending on, again, how you look at it. And then you're still making lower highs as well. So you're making lower lows, lower highs. So you're still locked in a downtrend. You haven't broken that downtrend yet on the daily chart. And likely it's going to take some time before you break that. But if you were to trade this, maybe take some profit at this trend line. Right now, we're looking at about $134 per share, depending on how long it takes to get there. Maybe looking at about $132, $130 per share. Maybe take some profit. Likely would see a pullback at that point, and then maybe a break above, depending on how financials are looking at this business. But that is it for Etsy. If you found value in this video, drop a like, subscribe, comment. Maybe I'll go later with another stock analysis video.